So today I'm going to be explaining the 3 reasons for why Bitcoin is repeating exactly what it did in 2013, where we saw 2 parabolic bull markets in under 12 months. Now, before you call me crazy, let's not forget, right now, Bitcoin is doing something that it's never done before. It's hitting a new all-time high before the halving. But I think all of this can be explained by something called the early Bitcoin double halving. Because when we get under the hood and we run the numbers and crunch the maths behind what these 9 new Bitcoin spot ETFs have done, we're going to see that we've essentially created an early Bitcoin halving that replicates the same supply shock that we saw in 2012, which is going to beg us to ask the question, is this the beginning of the final Bitcoin cycle?
This cycle will be the last and potentially one of the best of all the cycles, right?
So we're going to tackle the big question at the end of today's video, but let's start off with the maths. Okay, so we can see that the 9 new Bitcoin spot ETFs have bought around 3,500 Bitcoin every single day since the ETFs were launched. So when we have a look at this supply suffocation that we're seeing on a daily basis, let's go back in time and compare it to previous halvings and have a look at what each halving triggered in returns to a Bitcoin bull run. So let's go back in time let's begin at the 2012 Bitcoin halving and have a look at the supply shock that we saw. So we can see before the halving, there was around 7,200 Bitcoin produced every single day before that Bitcoin halving that happened in November 2012. This was because there was 50 Bitcoin produced every 10 minutes and paid to the miners. And when that halving happened in November 2012, the daily issuance went from 7,200 to 3,600, which is a supply shock of 3,600 Bitcoin. Awfully similar to the supply shock being created by the 9 new Bitcoin ETFs today in 2024. We're going to come back to this in a second, but let's have a look at what happened to the price of Bitcoin and what happened to the cycle in 2013 that actually followed that Bitcoin halving we saw in 2012. So we can see that the bull run essentially began in February 2013. We touched our previous all-time high around 4 months after that supply shock hit the Bitcoin market and come out of nowhere. It's important to notice that this was the biggest Bitcoin supply shock and it yielded the biggest Bitcoin bull run ever. We know that we saw a 100x in the price of Bitcoin in 2013. It essentially rallied from about $12 to $1,200. And we saw this very interesting anatomy of the cycle where we saw these 2 parabolic blow-off tops. We're going to come back to the anatomy at the end of today's video. First, want to crunch the numbers. So let's have a look at the 2016 halving. So we can see we saw the Bitcoin halving in July 2016. Before July 2016, there was 3,600 Bitcoin produced every single day. After the July halving, there was 1,800 Bitcoin produced every single day. So this was a year-over-year shock of 1,800 Bitcoin on a daily basis. So this means that there was 1,800 Bitcoin less produced on a daily basis, okay? 1,800 less Bitcoin. And we can see what happened 6 months after this Bitcoin halving. We touched the previous all-time high, and then Bitcoin went on an explosive rally and rallied all the way up to $20,000. So again, this is interesting that the daily supply shock in Bitcoin was less at this halving, and it took a little bit longer for Bitcoin to hit a new all-time high. Funny enough, it took 6 months, and you compare that to 2012, it took about 3 to 4 months. Okay, so very interesting. Let's move on and take a look at 2020. So before the 2020 halving, there was 1,800 Bitcoin produced on a daily basis. Today, after the 2020 halving, today in 2024, there's about 900 Bitcoin produced on a daily basis. So that is a daily shock of about 900 Bitcoin. That's what happened in the 2020 Bitcoin halving. And this halving happened in May, and it wasn't until 7 months later that we actually breached our previous all-time high, and we made a new all-time high. And this obviously triggered the next Bitcoin bull market that we're going to take a look at in a second. So before we get there and before we have a look at the anatomy of each one of these cycles, let's quickly recap what we've learned, okay? So in 2013, we saw the biggest supply shock. 3,600 Bitcoin ripped off the market on a daily basis. In 2016, we saw about 1,800 Bitcoin ripped off the market on a daily basis, 900 Bitcoin in 2020, and then in 2024, we're going to see 450 less Bitcoin on the market on a daily basis, okay? And we can see that in each of these previous cycles, Bitcoin typically hits a new all-time high around 3 to 6 months after that supply shock began hitting the market. So now this is where things are interesting. And this is where I think things could potentially be a little bit different in 2024 because Bitcoin just hit a new all-time high in February 2024. So this is 2 months before our scheduled Bitcoin halving that we're going to see. But like we talked about earlier, we've already seen a supply shock of 3,500 Bitcoin every single day since these Bitcoin ETFs actually came online. And this is the same size and the same magnitude of a supply shock that we saw in 2013, where we saw that massive 100x rally in the price of Bitcoin. Now, what's interesting about this time is the supply shock hit the Bitcoin market in early January 2024. That's when the ETFs entered the market and publicly started stripping those coins off the market and putting them into their ETF products. And we hit an all-time high literally 1 month after this started happening. It was about 6 weeks after this started happening. So this is actually the fastest supply shock that we've seen of Bitcoin actually being sent to all-time highs after an exogenous supply shock entered the market abruptly. But let's remember, do you really think that Larry Fink and his friends and his big billionaire buddies weren't actually buying Bitcoin before the ETFs launched? I mean, they actually filed to get this Bitcoin ETF all the way back in August 2023. And let's not forget, BlackRock has a record of 375 to 1 successful ETF applications, okay? They've literally got like a 99.8% approval rating for all of the ETFs that they've applied for. So do you really think the billionaires haven't been quietly scooping Bitcoin off the exchanges for the past 6 to 12 months? Look, that's just some food for thought, okay? The entire point of me presenting all of this data today is I think that we saw an early Bitcoin halving in January 2024. That's not disputable. That's not debatable. There's no speculation there. That's just raw data and how that raw data compares to 2013. Speaking of 2013, let's start having a look at why I think we could see one of these double Bitcoin bull markets pop off in 2024. So let's start by having a look at 2013, okay? And something really important to note before we get there is the fact that no Bitcoin market cycle has looked the same so far. So in 2013, we saw these 2 parabolic spikes of Bitcoin. So it rallied explosively from $2 to over $200, doing a 15x in price before having a very violent 85% crash. It went sideways for 3 to 4 months and then had another massive 15x bull market as it rallied from under $100 back up to like $1,300, okay? Now, this was all compressed within one 12-month window in 2013. We'd never seen anything like this before, okay? And 2017 was very different. Bitcoin just went straight up in one parabola, had like 30% corrections all along the way, and it was very stock standard kind of bull market stuff. It looked a lot like the Wall Street cheat sheet. And then it had a big 85% correction, and the rest is history. We know what happened. Bitcoin slowly recovered after putting in that bottom in December 2018. And then the 2020-2021 bull market was completely different again. So we saw a very small parabola that started to kind of look like the 2017 Bitcoin bull market. We saw multiple 25 and 30% corrections along the way as Bitcoin made its way up to about $65,000. At the time, most people, myself included, expected Bitcoin to go to at least $150,000 or $200,000 or $250,000. But then China banned Bitcoin mining, and we also had this little strange rounded top in the price of Bitcoin. Then we had a 50% correction in the middle of that bear market, and we rallied all the way back up to $69,000 $50,000, which was a little bit interesting, a little bit strange. And then the Federal Reserve decided to embark on its fastest interest rate hiking schedule in history. And this decimated every single asset class all around the world. We saw the stock market have its worst year in decades. The bond market, the 10-year US Treasury bond actually saw one of its worst years since the 1700s. Tech stocks got decimated and Bitcoin got dragged down in the chaos like every single other asset class in the world and had a big 75% correction. So each cycle was different. 2013, we saw a double pump. 2017, we just saw a standard parabola with lots of pullbacks. And then 2020, 2021, we saw this really strange double top kind of formation with a 50% correction in the middle, okay? So again, I show you all of this data to explain that nobody knows exactly what each Bitcoin market cycle is going to look like. I think the people using these models of diminishing returns and the power law theory, I think they're destined to fail and look a little bit silly because nobody knows where the price of Bitcoin is going to go. Nobody knows what the cycle top is going to look like. All we can do is have a look at the data presented to us today and compare that data to what's happened in the past. And I think it's interesting that the Bitcoin ETFs are creating a supply shock on the same magnitude that what we saw in 2013, where we saw that very interesting double pump in the price of Bitcoin. But then we have another interesting piece of data that kind of leads me into thinking we could see a repeat of 2013. This parabolic run that Bitcoin is currently experiencing today in March 2024 at the time of recording, the entire pump has been caused by institutional money. I mean, Bitcoin's tripled. It's gone from $24,000 to $75,000 in literally 5 months since October 2023. But there is no retail interest in Bitcoin right now. And we know that it is the retail participants who actually create these big euphoric blow-off tops in Bitcoin. So I think it's interesting that we're seeing a parabola form in the price of Bitcoin right now. And right now, it is only the institutional players involved in Bitcoin. I don't think it is really outside the realm of possibility to expect to see a big, 50, 60, 70% correction in the price of Bitcoin in the near future, okay? Think about it. There's lots of catalysts are kind of brewing under the surface today in Bitcoin and also outside of Bitcoin that could trigger a pretty large pullback in the price of Bitcoin. It has been in a macro uptrend since November 2022, okay? So the first reason is just the fact that Bitcoin's rallied so fast, okay? This is one of the only times in Bitcoin history where we've seen 7 straight green monthly candles in a row in the price of Bitcoin. It's just tripled in price since October 2023, okay? It's up by over 200%. Something like a 50 or a 60% pullback now would be perfectly healthy, okay? And when you actually have a look at the data, this has been one of the most extended rallies without a 25% pullback in any Bitcoin bull market ever, okay? So again, nothing goes up in a straight line, okay? Absolutely nothing does. But I think it's important to be prepared for pullbacks. And even if Bitcoin pulled back by over 50% today, let's say it dropped from 75K to 35K, that would not change the fact that Bitcoin is in this macro uptrend. For me personally, that's how I would be looking at Bitcoin. Now, the second kind of thing or a catalyst that could trigger a big correction in Bitcoin in the meantime is something like a mining death spiral, okay? So in previous Bitcoin cycles, we've seen that every single time we have a Bitcoin halving and the amount of revenue paid to the miners every 10 minutes gets cut in half, typically, it's normal to see a lot of miners drop offline because all of a sudden they're just simply not as profitable as they were before the Bitcoin halving. Now, again, we don't have the time to discuss all of the differences for why this mining cycle could be different for Bitcoin, because we do see that things are different in the mining cycle. We can see that today, ordinals are actually paying the Bitcoin miners an obscene amount of money in transaction fees. And this is also the first Bitcoin bear market where the hash rate has hit new parabolic highs, completely separating from its correlation with the Bitcoin price. We're not going to discuss any of that today. I'm just saying, look, a mining death spiral during the halving is potentially a possibility that could force some miners to sell some Bitcoin, creating a little bit of downwards pressure on the price and creating a perfectly normal, perfectly healthy, perfectly sustainable 30, 50% correction in the Bitcoin price that I think are not a lot of people are preparing themselves for. Now, the third catalyst I'm going to show you has to do with what's happened in the stock market, because we're seeing something that we've never seen before in the stock market. But again, we're talking about the price of Bitcoin and how obscene this rally has been over the past, 3 to 5 months. And just take a look at the Bitcoin chart. It's gone straight up for like 7 months in a row, green monthly candle after green monthly candle. And we can see right now, Bitcoin's at about $71,000. And I think a lot of people aren't prepared for the possibility of Bitcoin, having a nice, sizable, it could have a 50 or 60% correction, go back to $30,000 per coin. And I still think this is a macro uptrend. Bitcoin would still be setting higher lows and higher highs all the way up. Okay, it would look a little bit funny, but I think that, we could see a scenario of what we saw in 2013, where we saw a very violent, a very fast 85% correction in the price of Bitcoin, and then it go on and rally again by 10 to 15x. Okay, I feel like that is max pain today in Bitcoin. We see two parabolas and people get shaken out by the 50, 60, maybe even 70% correction that we see between those two parabolas. So now, as promised, we're looking at the stock market and have a look at how vertical this chart gets, okay? Now, again, it's been my mental operating model for a long time that we're going to see just a melt up in stocks. And all of the recession doomers and all of the people predicting like a 70 to 80% crash in the stock market, they've looked silly for the past 24 months because they keep looking at the old data. And they're saying, oh, but stock market's always crashing recessions. And all of the data we're looking at says the stock market should be crashing. None of it makes sense. Of course it doesn't. We're watching a hyperinflationary melt up, okay? Now, again, I haven't commented on the bubble-issues factor of the stock market for the past 3 or 4 years because this is my mental operating model. But again, right now, the stock market looks like it could be set up to just have a correction, okay? It looks very vertical, okay? Now, again, I've drawn some funny lines on the chart. This does not mean that this is a technical analysis video. That is definitely not what we're about on the channel here, but just find it interesting. It's been, the S&P 500's been in this very narrow range, looks to be dropping out the bottom of that range as we speak. And right now, the S&P 500 is more concentrated by the big names, the 7 companies with the biggest market caps than ever before. Right now, they make up over 30% of the total stock market. And a lot of these big names look a little bit shaky right now. So, of course, we're talking about the FANG companies plus the couple of extras. We're talking about companies like Tesla, of course, who right now look a little bit shaky. Okay, we can see Tesla, Meta as well, one of the big companies that's just gone absolutely parabolic recently and is, probably due for a correction. Nvidia, the same. Have a look at this Nvidia chart. It's absolutely bonkers. When you put this thing on a, not a log chart, but a regular chart, you can begin to see how bubblicious one of the biggest companies in the world is. Again, these top 7 companies in the S&P 500 make up over 30% of the market cap. So if these top 7 companies have a big, well, let's just say a healthy correction, 20 to 30% correction, this is going to drag down the rest of the S&P 500 index, which today is already lagging, okay? When you look at an equal weighted S&P 500 index, it looks very different because you're actually equal weighting that basket. When you look at the other 493 companies in the S&P 500, there is actually like none of them are at an all-time high. They're all 10, 20, 30% below their all-time high. So again, I think I've broken down this topic in another video in more detail, looking at these magnificent 7 companies and why they could, be setting up the perfect catalyst for a little bit of a stock market correction or crash, okay? Now look, again, nobody, myself included, knows where any of these stock prices are going in the short or even the medium term, okay? But as I've showed, a lot of these charts look a little bit extended. And maybe if the stock market has a 20, 30, or even a 40% pullback, maybe that could be the catalyst to create a Bitcoin, 30, 40, or 50% correction that happens in the middle of a bull market. That could kind of be the catalyst to create that double parabolic Bitcoin bull market. Again, I don't know what's going to happen, but I think a lot of people are kind of expecting the 2017 cycle to completely repeat itself, okay? But those are just a couple of the reasons for why I think we could see a 2013 repeat. There's actually a few more that we didn't have the time to discuss in today's video. So if you want to learn a little bit more about why this upcoming Bitcoin bull market could be a little bit different, you're going to love the recent video we filmed on that topic. I'm going to pop a link to it right about there. And with all that said, thanks for tuning in. We'll see you on the next one.